My name is David Herrig. Welcome to the Network Connect. I'm filling in for Rick Brimacombe tonight. He asked me to step in here. He had a family obligation with his daughter. The Network Connect, really briefly, if you haven't been here before, is a catalytic group designed to connect entrepreneurs, investors, and service providers. It was founded in, correct me if I'm wrong, Dick, 2011 by Dick Summerstead. Rick joined the group in 2013, and they've been putting on events like this. This event tonight is called the Reverse Elevator Pitch, which is, in my opinion, pretty cool. Kind of flipping the script. Instead of entrepreneurs pitching investors, it's sort of the other way around. The panel tonight are three entrepreneurs and investors who come from different backgrounds, and I'll let them introduce themselves each individually here in just a second. Rick wanted me to make sure to mention the sponsors of tonight's event. This kind of event wouldn't happen without them. They're up on the board there, and they are all fantastic. I actually myself personally just started working with Olsen Thielen and thought they were pretty great. So with that said, I'll do a brief introduction. Patrick Donahue, CEO of Hill Capital Corporation, 20-year veteran of the capital markets. Raza Hassan is the CEO of TimeSolve. It's a time tracking application for the legal industry. And Rob Weber, who is a serial entrepreneur and founder of Great North Labs, a venture capital group out of St. Cloud. So with that said, I'll let them kind of color in the introduction, starting with you.
Okay, sounds good, thank you. I appreciate the opportunity to be here tonight because I am always happy to talk about access to capital and how entrepreneurs can make that journey more efficient, because we need more of that. Any business, even under 50 million in revenue, it can be challenging. And I bring that up because my whole career has been in finance. My career started out actually as an entrepreneur, but then went into investment banking. I was a research analyst and an investment banker, and I saw firsthand how there were companies, even publicly held companies, that would have, 20 million in revenues and had a hard time in periods of time even raising a couple $1 million. And that was very eye-opening, being in the capital markets. So bulk of my career was building the capital markets at Northland Securities, Northland Capital Markets. And then in 2010, I started a couple of businesses. One was around building out educational courses for entrepreneurs to help them understand access to capital. And another was a medical product company as well. And then in 2014, we started the journey of putting together the idea around Hill Capital, which is an alternative really to private equity. It's a way for us to invest in companies that aren't necessarily going to meet the profile of traditional venture capital. And so that's what we're doing today, is investing out of a fund for our first fund for Hill Capital Corporation. So
Nice. Thank you. Flip this way.
Again, my name is Raza Hassan. I'm the CEO of TimeSolve, which is not only time tracking but also billing and does a bunch of other things targeted towards law firms. I've been running this business for 12 years, and I'm really humbled to be in the company of Patrick and Rob here. I'm just kind of like I might be a little bit older than, but I feel like much younger in knowing what's going on. So, but in general, I consider myself as tech entrepreneur. I love the internet. I learned about the internet about 20 years ago, getting an MBA at the U, and at that point I decided that I'm going to bet my life on it, so I just switched careers and have been involved with that. I worked at multiple companies in product management, product marketing, but all focused on web-based applications, and then I found an opportunity to take over or acquire this business from Thomson Reuters, which was a fun, challenging thing that I enjoyed. And then right now, trying to be, I guess, instead of the high flyers, We want to be the bottom feeders looking for failing billing companies using obsolete technology. So that's what I'm trying to look at and go for, but I'm also open to other types of investment opportunities that would help us serve the professional service providers.
Nice. Rob?
Yes, I'm Rob Weber. I started a company about 17 years ago out of the dorm rooms of St. Cloud State called Freeze.com, which became NativeX. And I started with my identical twin brother, Ryan. And we had the good fortune of kind of networking everyone who spoke at class, and we kind of bootstrapped our company. We were at about 50 grand a month in revenue, and it was all profit. We didn't have any overhead or cost. And I remember we met the attorney we ended up working with lived on a lake near St. Cloud, and it happened to be this gentleman named Young Sohn, who was a CEO of a public tech company in Silicon Valley, lived on the same lake. His wife was from Plymouth, kind of Minnesota originally, but they had met at Wharton, and they moved off to Silicon Valley, and Young had a successful career there, but we were never trying to raise money. We were able to bootstrap our company. We didn't need any money, but Brian kind of convinced us to meet Young, and Young, at one meeting at his lake place, and Young decided to organize an angel round in our company. And one of his friends from college at Wharton was Pradeep Madan. And Pradeep and Young were both very accomplished Silicon Valley executives, and all of our angel money, was 320 grand, came from angels from Silicon Valley and through Young and Pradeep. They both joined our board. That 320 grand in a lot of their kind of mentorship, after 15 years, we ended up returning $40 million. No other outside capital. Grew to 170 employees. Kept our headquarters in St. Cloud. Grew in Minneapolis as well as San Francisco. And around this was the last sort of 15-year journey. 5 years in, we had our first liquidity event. My twin brother Ryan and I set up a family office about 12 years ago. When we started, we were around 50 employees back then, and we were starting to kind of want to get back involved in the early stage, foundational stages of startups. And so we started investing out of our family office a couple $1 million. And after 12 years, we delivered very strong returns. We had 26% IRR, and we sold our company. And we're thinking about what to do next. And we thought, why not try to pay it forward at even more scale? We're making good money, and it's very, with our investments, and it's very mission aligned with with the impact we want to have. And so we decided to start a fund 12 months ago, and that was Great North Labs. And we invited a lot of our kind of entrepreneurial friends and families as either, as advisors, as investors, and it's gone very well. We've done 7 investments so far this year, and that's kind of tracking all seed stage. We'll do seed and early growth investments. Kind of average check size between 300 grand and 1.5 million. I think within a quarter or two of raising the fund, we were already ranked one of the top 2 or 3 most active investors in the state for early stage venture, and we're just getting started. I think we'll be the most active investor in the seed stages in Minnesota, and hope to do this for 20 or 30 years and do it at a lot more scale with partners and expand really throughout the Midwest. But Minnesota is definitely home for us. So, and by the way, Pradeep made about a 30x return on his angel investment. And Ryan and I didn't think much. We said, let's launch a venture fund. And he calls us up. I quit the last company after we sold it, August 2017. In September, I get a call from Pradeep. This is our Silicon Valley kind of mentor and board member all these years. And he said, Rob, what do you think about, what if I start working with you guys on your venture fund? And I think, oh, geez, you're the smartest guy I've ever met. Why would you want to work with us when you live 3 miles from Stanford and you can trip over venture funds? And he said, I saw the execution that you guys had, and it was as good as the companies in Silicon Valley. And I really believe in what you guys are doing. And he basically joined us without any partner agreement and started working full time right after that phone call.
Nice.
And so Pradeep is our 3rd partner. We're incredibly lucky to have. And Young is now Chief Strategy Officer, President for Samsung Electronics. So he's looking at long-term strategy, C-suite for Samsung. Doesn't get any more high level than that in the tech industry. And Young still spends his summers here. He's just been a great mentor, and Just super lucky. But you know, with our fund, I think our mission really is, I don't think it, I have a lot of entrepreneurial friends, and a lot of them in this region have stories that are sort of similar, or seem kind of accidental. If they fall in the capital, if they fall in the mentorship, you know, especially like 10 to 20 years ago, it seemed like it was very just sort of accidental. Like, we know a guy who knows a guy on the lake who knows a guy. That we don't need to be so accidental about it. Let's just intentionally find the best entrepreneurs and support them with the resources they need to be successful. And that's what we set out to do.
Fantastic, thanks, Rob. Really quick, I'll just give you the format that I'd hope to try to do here. And just one piece of my background, I'm a serial entrepreneur. I'm on my third startup. First two were venture funded. Rick is actually an investor in my current company, and that's how I got connected here today. So if I wasn't up here moderating for Rick, I would probably be sitting in the audience with all of you, asking the same questions of these guys that I have on the sheet in front of me. But I don't want it to just be my questions. So I was hoping just to kind of do it round robin. I would start a question, ask the panel to answer, and then turn it over, let you guys chime in and do a follow-up or ask anything you want and see where it goes. So with that said, guys, the first question I have for you is what stage of company do you prefer to work with, invest in, or buy? Start with you, Patrick.
So we purposely will only invest in established businesses, and so for us, those are companies that are at or on their way to $5 million. That's important to us because we have strong opinions about earlier stage businesses and the type of mentorship they need. Right? There is a real need for things like Y Combinator and so forth, so if something is really early stage, they need to have that high level of expertise. We come in as investors, we'll invest directly $500,000 to $1 million in established businesses that have a nice growth opportunity. And we'll do things that a lot of traditional institutional investors won't do. Like, we won't be afraid to take a look at like a services-based business or a business that is a little more esoteric or has like a traditional kind of boring product line, but they have some growth opportunities. Those are things that are of interest to us. So that's why we talk a lot about kind of more like Main Street type of businesses that we look to invest in.
All right, so I already mentioned, I guess, we're trying to grow, or I would say we're working on growing TimeSolve. I mean, we're growing organically, but at the same time, I see a lot of opportunity in acquiring what I consider obsolete or companies becoming obsolete because of the changes in technology in the professional services area. So that's one area. The other area is just other companies that can be complementary to what we are doing, and we can add more. I guess we're trying to go towards sort of a more of a solutions type of a provider. We deal with law firms, so instead of just selling one part, we're looking at combining multiple solutions and providing a more just one-stop shop as a strategy. But initially, right now, as I said, we're looking for more of the failing software companies.
Thanks, Rajan. Rob?
Yeah, so we're more of a classic venture fund, although we're smaller in size as a micro fund. We're almost on fundraising, but we'll be probably around $20 million. And what we're looking for is, really, I think because of that fund size, we don't need to back unicorn type companies. We're fine with, we've done very well investing in sort of decicorn type companies. Now there's actually been quite a few of those in Minnesota and the upper Midwest, but they don't really make, really flashy tombstones on your website, but they can be very strong returns if they're capital efficient. And so there's a bunch of those. We see a lot of, what I would characterize it as, generally it's sort of, it's going after kind of sleepy industries with sort of a kind of a theme around digital transformation, particularly leveraging the internet, cloud, and kind of mobility. A lot of industries just have not taken advantage of the technology that's available. And so if you look at all of our first 7 portfolio companies, they kind of fit that theme. But I don't want to confuse, our fund. We have, we love to back sort of moonshot companies too. We've got a couple of those in our fund. but it's not sort of it's not mutually exclusive. You know, we want to fund good companies that we think can, you know, generate strong returns, venture-oriented kind of returns. But we'll also look at companies that, you know, are sort of more moonshots. We're trying to, on a kind of a risk-adjusted basis, deliver very high returns for our investors.
Nice. That's great. Thanks, Rob. That's I actually really like that. I just, you think that all these sleepy industries are transformed, and they're not. I just read an article that Cargill and Archer's Daniels Midland just converted grain trading from paper to computer like this week. How is that possible? I mean, and so I think there's opaque industries to transform and sleepy industries, so that's exciting. Do you guys have a question, follow up on that, or any direction? Does anybody have something they'd like to ask of that? What kind of stages they invest in? Okay, that's fine, no worries. No worries, I've got about 40 questions, so.
Can I interject, okay?
Yeah.
I'd like to go off the script, sorry, a little bit, if you
Yeah.
don't mind. I'm just curious, okay, again, who are the investors here and who are the entrepreneurs looking for money? I'm just trying to understand who we have here, or.
That's a fair question. Who's looking for money? Raise your hand. All right.
Okay,
There you go.
Well, thank you.
And then I think some of the sponsors are here too. Olsen Thielen, Schwagman, and Inskeep. Or is anybody here? No, maybe not. Okay. All right, second question. And I'm going to actually skip over it because you kind of covered it. What's the first thing that catches your attention when you see a new opportunity? The very first thing that makes you perk up and get interested in it? Go ahead.
Quite simple, it's people. Any business under 50 million in revenue, it's all about the people. Because any business that is under 50 million, of course, the smaller it gets, the more important it is for those key employees. Because the smaller businesses, they can't afford a major change in leadership. And so we really look for who are the people that are leading that business. Can we trust them? Are they transparent? Do they want to collaborate? Do they want to work with like our network and our shareholders and people we can bring to the table to grow? That's really important for us. So that's a big factor.
So I guess in addition to the team, obviously, I guess that definitely, makes a lot of sense to look at the people. In addition to that, I guess a couple of things I would say. Again, I have spent and feel like, my life in products and product management and things like that. And I would share this again as a kind of an educational opportunity for all of you also. Is that looking at any opportunity, especially as a product, you have to realize is that there is no like a winning formula, okay? And I would share some examples. General Motors spent over $1 billion, and there's a documentary on Netflix on, I guess, their electric car company called EV1 out in California.
Mm-hmm.
And then again, Apple has spent a lot of money on, I guess, I don't know, it was Palm Pilot or whatever. The Newton, sorry, yeah. And then Microsoft, has spent a lot of money on the smartphone, okay, trying to compete with Apple, and have failed. So the point I'm trying to make here is that there is no formula to say, okay, if I have this kind of a product, this kind of a team, there are no guarantees in business. Okay, so for the people who are here as entrepreneurs, you have to have a belief, and that's kind of driving your strategy, and that's what you should go after. And again, just like life and death, we don't know how long we're going to live. There are no guarantees. If you are successful, you may get invited to sit on this panel, like these two gentlemen. Otherwise, you'll still feel like you did something. So go for the guts, no glory. But again, go for some belief. So that's kind of what again, going back to your question, if I'm seeing some opportunity, one of the things I look for is, it shouldn't be just, again, team is important, but I like to see a system. A system is something that runs without people clicking and ticking things, and that's where I like the internet and just to give you an example, like Facebook or on LinkedIn or things like that. Those are the types of things I really like, but it depends upon the opportunity. But at the end of the day, there are no guarantees. Focus on what problem you want to solve and what you want to bet your life on. Money is fine, but I think focus on if you're going to have fun doing it.
That's great. Thanks. Rob?
One thing,
One thing.
Took too much time here.
I think I would just say, it is the people and the team, but recognizing that the team that is starting the business is gonna really evolve. Those initial people, to me, they need to demonstrate strong vision, but they also need to be adaptable within the context of that vision to new inputs and really have a learning kind of mindset, a mindset centered around experimentation. And so your vision should not change, but your product should be highly adaptable and you should be experimenting as quickly as you can until you can go to market with a product that really excites customers and solves a really pressing problem. But so that's how I would describe what I'm looking for out of the people.
That's good.
Yeah.
That's really good. And maybe just as a quick follow-up to that, if that's the top thing that catches your eye, what is the biggest turnoff?
Well, tying this back to people, the biggest turnoff is if we get any sense that a person is not, for lack of better words, coachable, that's a huge turnoff. If there's any whiff that they're not going to be collaborative, transparent, because then it ties into a lot of other things. So you get into trustworthy, integrity, and so forth. I mean, those are kind of the obvious, like the golden rule stuff. But in this day and age, it is so important to be collaborative and willing to, share ideas and to, think about different ways to get things done. And the thing that always really scares me if somebody's like this and they're afraid to share their idea or they're afraid to share their financials or some stuff like that, I just think that's a death trap in today's era when things are moving extremely fast.
That's good.
All right, great. So again, I'm here to learn from these gentlemen. So, you hear their questions, make sure you're paying more attention. So for me, I guess, again, people are definitely important. The other thing, as I think I've just touched upon, is it a system or is it just something that a person does, and if you remove that person from that whole picture, that business is gonna fall apart. So that's the thing I really,
The weakest
turn
link,
off.
kind of.
Yeah, turn off is like, okay, is it driven by two individuals, and if they're not there, then this business is gonna fall
So
apart.
there's like a single point of failure.
Yeah,
and it's-
that's what,
Okay, that's good. Rob?
I think the thing that turns me off, and I think that maybe the biggest challenge holding back Minnesotan entrepreneurs versus, say maybe stronger entrepreneurs around the country, and maybe there's like high performing entrepreneurs everywhere, Minnesota included, but I would say underperforming entrepreneurs usually underperform because they don't listen to their customers. They start building they build before they validate based on customer feedback what is going to solve a real problem, and often that they may talk. I can't tell you how many founders I talked to where I asked them, how many customers did you talk to? Oh, 2. You started building for 12 months or a new product based on a couple of customer conversations. Well, you must be really good at listening if you can have 1 or 2 conversations and completely know what I think you need to formulate a hypothesis, test it, iterate on it, talk to more customers. It gets expensive when you start building. It's actually really cheap to just keep interviewing customers and forming hypothesis. We would have far more successful entrepreneurs in this community if we would talk to customers more and not rush to build.
That's good. That's really good. What recommendations do you guys have for the entrepreneurs in the audience who are putting a deck together or a presentation to communicate their vision and communicate what they're building? What do you guys look for in that? What kind of format do you like to see? What are the best practices around that maybe?
don't spend much time on it. It gets, that is a red flag if you've seen somebody that's like spent way too much time on a deck, because then it's like, okay, could you have been talking to customers or doing some things that could really move it along? I'm a huge believer, you know, Art of the Start, Guy Kawasaki, all these things, there's a ton of stuff on the internet, but it's like, you know, have 10 or 12 slides that are highly visual, very few words. But I don't want to look at your deck. When I meet with somebody, I want to look them in the eye and just have a conversation. And if there's a couple visuals to point out how something works or an analogy, that's awesome. That's great. That's kind of like, it's a helpful tool that is there. But it doesn't need to go into a ton of details. We'll get to those details when they matter. I need to understand right away what a business does. What is the economic engine? That's our question. What's the economic engine? How does this thing work? And how can we make money as investors, and how can you do well as a business owner? So
That's good. Right.
For me, I guess one of the things that I feel uncomfortable sharing, and I also wonder when people are sharing that type of information, are longer term financial projections, or that the market is, you know, $30 billion, and if I can get 1% of it, those types of things, I think, to me, are not meaningful. And if somebody's trying to solve that, maybe provide multiple optimistic and pessimistic scenarios types of things. But unfortunately, again, you know, those numbers are not something I prefer to bet on, because it's just speculative.
That's good. Rob?
I think there's a lot of good reference material on pitches. I would say one thing that's a turnoff for me personally is people who spend too much time in their pitch talking about their pipeline. If all your time is spent on your pipeline and all this great revenue you're gonna have, like every business could talk about its pipeline. Like, you're not gonna get that much credit for your pipeline. You know, focus on what you've actually accomplished, and I think that's much more important than kind of some. I've yet to meet an entrepreneur who, you know, through their sales channel that doesn't have a strong sales pipeline. I ran a 30-person sales team, and I was yet to meet a sales rep who didn't have a strong pipeline either. But some sales reps perform and some didn't, you know. So
Yeah.
that ultimately, anyone can make up a strong pipeline. It's hard, you know. You're not going to close your funding round off a pipeline.
Yeah.
yeah, and I'll just throw in, so hearing you, Rob, kind of helped me think of something that I think is kind of a hidden little secret and something we look for all the time. But talk about where you really need help, like keep it real, because that's where you can really get investors to say, geez, we have those type of connections, because we're all looking to do things well beyond money. Money is a commodity, and I know when you're fundraising it doesn't feel like a commodity, but the reality is it is a commodity, and the differentiator is the value add, and you need to figure out that value add of the investor. So go in, keep it real, and say, here's where we're having issues, and see if that investor could bring some additional value to the table to help you solve for it.
That's good. Maybe turn it back to the audience, see if anybody has a question after that little spurt on decks and presentations. Anyone? Yeah.
My question revolves around, there's kind of different perspectives, but when I think about how I'm communicating to an investor, I'm trying to look at it from their perspective. And one comment I received was, you better have a very clear explanation of your exit. And my question is, Rob, when you started and you met with your first two angels, is that really that critical, especially at the early stage? Because I almost feel like that will come. That's an option in the future. I should have an idea, but it shouldn't be a critical component.
I don't care what you think about your exit.
Okay.
Build a great company with a strong business model in the early stages that you can show early signs it's scalable, and great companies have lots of exit opportunities, especially in this market. There is so much capital just flooding the market. If you can get your early stage company to a moderate growth stage or a late stage, you have more exits and you'll know what to do with. It's just gotta, it's really more about just building a business. So,
Yeah.
and I personally have decided although we do early stage investing, I really like to invest and sort of hold my equity. I don't like to invest in what I would call like product development companies where they're trying to predict what some piece of technology that someone may want to buy,
Mhm.
and then they have no idea about how to commercialize it.
Mhm.
I don't do that. I don't make those kind of investments.
Mhm.
So, when we're investing, we're looking for companies that actually have a functional business model. So I think that would be maybe different if I was in a product development kind of investment mode where I was trying to predict what others might value.
That's good. How about Patrick? How about you though, at a later stage?
Yeah, we are not exit dependent, and that is super important, and that's why we call ourselves an alternative private equity, because the vast majority of private equity and venture capital is actually a small asset class within broader private equity. 99% of them are exit dependent, meaning that there's got to be literally a sale of the business for them to realize their return. And I just have a fundamental disagreement with that. I don't think that's in the best interest of the entrepreneur, the owners, our economy overall speaking. I think there's a lot of dumb deals that are done because they're having to exit because of financial investors. And there's smarter ways to structure investments. And that's what we do at Hill Capital. There are ways we can structure investments so we can get the return that we need, yet the business owner can continue to own and run their business long term. And I think there's a lot of innovation that can be brought to how investments are made, and that's what we're looking to accomplish.
That's good. Raj, anything to add?
I don't have anything.
Okay, no, that's fair, that's fair. Is that good?
Yep.
Yeah. I had one question, I thought of actually on the way over here. What kinds of questions do you like entrepreneurs asking of you when you're meeting with them?
Well, simply tell me about you, tell me about your fund, who's involved, what do you guys look for, all those type of stuff. And then, the other big question is how can you help us? How can you help us grow? What can you help us with? That's one of the biggest pieces of advice I can give any business owner, entrepreneur, startup founder is people really need to do as much time interviewing their potential investors as their investors are going to interview them. And that's really important. And it's really hard to do. I get there, I've been there. It's hard to do when you're looking for money, like you just want to grab the money and go build your thing. But when you've got somebody that's going to be on your cap table, they're there. And they need to be really good partners. And so you need to know that they're going to be a good investor. And so I look for that. Like, do they really care who we are? Because it starts to tell me some of our things that are our core values. Again, are they going to be collaborative? Are they going to be transparent? Do they want to know these things? It's pretty telling. So I would encourage you to ask a lot of questions.
Raj?
Yeah, so again, great advice, Patrick. So in addition to, I guess just to add to that is, every entrepreneur has some kind of a vision of changing the world or taking on the world. And if you don't, please have one.
That's good. That's right.
So when you're discussing, I guess, your dream and the investor's dreams, or at least their direction, try to see if those things align. Okay, because then the synergies will be there, and as Patrick mentioned, they can help you accomplish those. But that's the part you gotta assess. Are these people on the same wavelength where I want to take this business with their help or not?
That's good. Rob?
I think it might be maybe be helpful if the question was asked, what are your goals with this fund? And how does my company fit into your goals?
Mm. Yeah, yeah, that's really good. One question I had too, I was talking with Dick when I came in here, which I've had as an entrepreneur a lot, was how do you get access to potential investors? What's the best way to approach them? And so I think I would reverse the question to ask, how do you like to be approached? How do you like to be introduced? How do you like to see entrepreneurs coming to you? So do maybe.
Yeah, there are some investors who have strong opinions about this, so I can only speak for us. We are happy to engage with people however they come to us, and especially cold. Ping us on our website. We're going to be launching a new website. There's literally going to be a big apply button, which takes all of a minute just to give us some basic information so we can start the process, and we'll give it serious consideration. So I think it's really important for entrepreneurs, though, to really understand that fundraising at the end of the day, no matter what, it's a sales game, right? And you gotta have that sales hat on, and it's a numbers game. You gotta go find, 100, couple hundred people to go talk to. Because one is, there's only gonna be a limited amount that are a fit, and then you gotta, again, in my opinion, whittle it down to the people who are a really good fit, like where it's a really good match. And so you gotta come to all these events. You gotta go out to things like 1 Million Cups, or go out to Silicon Valley and hit up the Founders Institute and go out there and talk to whomever you need to in your industries, and to have a lot of conversations, because the root reality is that any business under $50 million in revenue, access to capital is still really, really difficult, and you just need to get out there. The only people that really have true access to easy capital are the companies that are running a couple $100 million in revenue and can call up Goldman Sachs and price a deal that week. But for the rest of us, that's not reality, and you gotta go out there and just boots on the ground and get out and talk to people.
Roger?
I guess I'll say, that covers everything, he has said all the good stuff, so I don't have anything better to say.
I think maybe an important topic around communicating with an investor. There was a blog post a while back by a guy out of LA named Mark Suster. You maybe heard of this blog post, where investing, in terms of your own investor relationships, think of it as a line and not a dot. If you think you're gonna, however you get introduced or cold or whatever, you have one interaction and you think you're gonna get funded, you're dead wrong. That almost never happens. Maybe 1 out of 100. It's a line. You need to get, if you wanna raise money, you have to realize, after you close, you should be on your best behavior. And your best behavior should be regular updates. You should be telling a story about your progress, your momentum, what you're learning, demonstrating your execution. If you can't tell a story about your execution over time and form a line, what is that going to look like after we invest? I need to update, you gotta understand, if you're investing other people's money through a venture fund or private equity fund, we're on the hook for there's a sort of a reporting responsibility to investors for 10 years. If you can't communicate that story and that progress, in private equity, in a liquid private equity, that's probably the number one reason venture or private equity is, not the most favored asset class, is because of, I think it's not that people are worried about the lockup, it's because of poor communication. So it's a line and not dots. It doesn't need to be a long meeting, but build on that meeting and, and provide strong updates.
That's really good.
Stay in touch.
That's really good. This is a pretty basic question, but I'll follow it. I think this is pretty good. What bit of advice would you give your younger self, your earlier self, as an investor? So when you first started out as an investor compared to where you are now, what are the chief pieces of advice you'd give yourself?
Well, I was in a very different place at a younger age. One, this is more of a personal item, but one, I would say I'd take out a lot more of the anxiety out of it. I don't know, be a little more stoic philosophy, if you will, on your approach and how you interact and so forth. But the other thing too that I'd point out, kind of the younger self, because I actually started my career in fintech, but in a way it was an online brokerage firm. And the one thing I wish I really realized is that I came out of college really thinking that the business world had everything already figured out, especially in financial services. And as the years went on, I realized more and more how broke everything is and how dysfunctional it all is. And so there's part of me that wish I started like a fintech back in 20 plus years ago. But now I know. But I don't know if that answered the question.
Yeah,
but that's
okay.
kind of the things that came to mind.
Yeah.
Yeah, so I think another thing, again, same thing here, to get started earlier is a beneficial thing, and a lot of times, taking that risk takes time. So on that risk part, I would say a couple of things. One, again, I think if you can somehow start looking at money as just, as a commodity, I mean, most of us have to have enough to get that figured out. That's why, you like, could say that right away. But at the end of the day, okay, we all are gonna have 3 meals in a day, sleep in one bed, all right? So let's say, you blow $200,000-$300,000, you're still gonna eat 3 meals and live in, and sleep in one bed, okay? But I think the point I'm trying to help you understand is, don't let the money drive your life, okay? Go after whatever you believe in, and I can guarantee you that you're not gonna, we think we're gonna fail, that's what the fear is, but this is kind of my own thing that I say to our, I guess, colleagues and coworkers, is that people in generally are not stupid, they're just scared, okay? So that's what you gotta overcome it, and then, this is a tremendous country, okay? I'm so happy to be in the US. I originally grew up in Pakistan, and I think this is the best country for doing any business. The minute you say you're a business person, I think your stature is elevated in the society because you're creating value and you're creating jobs. So that's what you should be thinking of. I should have thought of earlier.
That's good. Rob?
I published a blog post last year, right when we started our fund, and it was a letter to my younger self, and you can read that if you want the long answer to this. But I would say, just as whether it's an investor or an entrepreneur, I'll kind of put my entrepreneur hat back on. I had the good fortune of scaling a company very quickly. About 5 years in, we recruited and hired a now retired former Fingerhut executive named Andy Johnson. Andy was the president at Fingerhut up until their sale to Macy's Federated, almost $2 billion exit. Andy was a world-class manager, and when we were at 50 employees, kind of learning management in our this is about 12 years ago, I'm like 25 years old, learning everything for the first time, just a sponge. And one of the things I learned about Andy was really the importance of a couple of key values in building a growth organization. Actually, I would say there's one I took away from him and maybe one I developed on my own. Those two values around building a high growth company. Number one, you want to this was from Andy, create a culture centered around accountability. And I think the best advice I could give to any entrepreneur is to be very transparent with your business performance. And you'll see this in high growth companies. You should literally post your operating metrics on your, the front screen when you walk into your office. You should have your operating measures. Everyone in the organization should know it. You can't expect to create a culture of accountability if no one else knows what's going on. And then secondly, you really need to create a culture centered around growth. We're in the tightest labor market probably the earth has ever had, especially in the skills that are required to grow a company quickly are in the highest demand. And so what you have to do if you're building a growth company is create a culture. If you're going to grow a high growth company, you got to create a culture around growth. And that starts with investing. You need to develop a workforce that invests in their own growth. They need to be improving their own skills, and they need to be able to. You do not want to go outside the organization constantly to bring in more skills, especially in senior roles.
Mm-hmm.
You're gonna upset people who are there with you from the beginning. So the best way to avoid that kind of negativity. It's okay once in a while, but you want to invest in creating a culture centered around growth. You need to create. I don't know. I could go on and on about how to do that, but
Yeah.
I think that's really key.
That's really
The
good.
people that you need to grow and scale with your company.
Yeah, that's really good. One thought that just came to mind, you guys have kind of pretty specific stages that you're looking at, early stage, buy opportunities on struggling companies, a little bit later stage. Not everybody in here is going to necessarily fit into one of those buckets. My guess is a lot of you are really early stage, maybe even just in your garage or your house, trying to piece it together and figure it out. What advice would you have for people who maybe don't fit into your bucket or just getting going or just trying to figure it out? what advice would you have for them in terms of how to get some traction, to get a little capital, places they can go, things they can do to move the needle on their business before it's something that you guys would look at?
Yeah, the biggest thing is get out and have conversations. I mean, get out of the garage, get out to events, you're here, so obviously you're already doing that to some extent. There's a lot of really good meetup groups and organizations like this. I'm a big fan of 1 Million Cups. I'm an organizer for 1 Million Cups in Eden Prairie. It's a safe place for entrepreneurs to share their story. I think things like that are extremely important. The thing that also that people need to keep in mind, because I did a 180 on my advice from 15, 20 years ago. I used to tell people, like, you have one bite at the apple, like, get yourself ready, and then we're gonna go out and meet with an investor and you better have it all set and ready to go. Now it's the complete opposite. Get out there, chat with different people, follow up, stay in touch and so forth, even if it's not the right stage and so forth. You heard Rob talk about, build that line. Have a conversation. I was on the phone with somebody before this meeting for 45 minutes and I knew it wasn't a fit, and he, at the end of it, he goes, why are you doing this? What do you want out of this? And I said, nothing. I said, I'm in the business of connecting dots, and I said, your business might be in a place for Hill Capital at some point in time, but I said, just as good, one of your neighbors, somebody you might know, might be a really good fit for us, because I'm in the business, we've got to look at 100 deals to find a couple that are fit for us, mutual fit. So just take that advice to heart. Don't be afraid to get out and talk to people, even if you meet a venture capitalist or a late stage private equity person, have a chat with them. And yes, somebody might say no or they don't have time, so what? Move on to the next person and keep moving.
That's good.
I would like to add again 2 things. One, people are going to invest money after they see something in what you're trying to accomplish. So to do that, focus on at least gaining some customers, okay? Because to me, a product, if they don't have users and customers, then it's not a product, okay? It's just a dream. So that's one thing. The second thing is, I think people like us or other people are happy to help, okay? And in addition to, I guess, looking for money, you can also ask for advice, and I volunteer myself. And if you need help, I'm happy to talk about whatever I can help other people, because that's how I feel I learn, and it's all about, doing something worthwhile. So leverage that, okay? Just reach out to say, hey, can you help me? Because at the end of the day, running a business, it's all about what's in your head and what you learn from other people. And again, as both of these gentlemen said, you gotta be open to learning, okay? And not only just be open, be seeking people on learning, okay? Because one of the things I've done, I believe, just quickly to share this, I put together an advisory board, okay? And I guess Rick is one of them. He's kind of more focused on the investment side. We have somebody who is focused on the legal side, an attorney, another person who is the CEO of a tech company, and so on. Just look for advisors, okay? Make some kind of deal with them. If you can't afford money, offer them something else. People are here to help, okay? So just take advantage of that.
Good. Rob?
I definitely agree with Raza on that. I think I would say there are some exceptions where you don't always have. I think what's important is that you have sort of customer validation that can come in sometimes in other forms in revenue. Even also you can have revenue and have strong customer validation. So I think there are, in terms of other forms of customer validation, it might be, you could have qualitative research or qualitative feedback from customers. For example, if you create a Kickstarter campaign for a consumer product and you set a record on Kickstarter, you'll probably be able to fundraise. You probably won't even need to, but there are ways to sort of, define different milestones and sort of demonstrate demand or demonstrate customer validation. Also, there are degrees of what investors are looking for. If you have the most compelling business model I've ever seen, and you're extremely well thought out, and you've tested your assumptions, and you have a lot of research behind it, and you've shown some early beta or some ability to execute, might be able to get a pass on revenue. But I would say like the odds of you doing that are like, probably like 1 in 10,000, that you don't usually see that. But if I thought I saw the next Airbnb business plan before my eyes, and and a lot of the ideas were sort of validated, I'd be ready to write you a check right now, actually.
Did you
So-
bring your checkbook?
Yeah, I always bring my checkbook. But I think that's, for example, like I would say, like, we don't see a lot of like platform companies, or social networks or something, but Facebook had huge validation, evidence through strong customer engagement, retention. Google was the same way. They had very strong customer validation or user validation well before they had revenue. So, but I think that's something, for most businesses, it's going to be revenue. I would just say you're better off focusing on your execution to get and demonstrating some signs of early customer validation. And if you don't have the capital to do it, then you probably need that capital for hiring purposes, then you got to be persuasive enough to find people who will work for equity, or go get a job and bootstrap it. Don't expect investors to put their money in while you still have those, that level of risk. Unless maybe your friends and family will, but probably not private equity or venture capital.
That's actually really good. Do you guys have questions on that? Go ahead, yeah.
Yeah, I'm Mike Macalusa with a company called Global Access. We have a slightly different business model than these gentlemen. It's really fascinating, the discussions. I really thank the panel for everything they've been talking about. We often look at companies as well. We started almost like a family office, just having partner capital. We didn't go outside for money. And so when we look at a company, it's a little bit different. So we're willing to go in and say, hey, this company has 80% of what we're looking for, but we'll go in and we'll build the rest from scratch. Right? And literally we'll run a division of a company, we'll run a foreign office of a company, we'll do whatever is necessary to really enhance the value of that business. And our first investment, well, maybe we were a little bit jaded because in our first investment we took 42 times our money out of that investment, and we still have a third of our money at risk in that company. And the last valuation was $500 million when the Series D round came in. So I expect that we can probably get a double or triple even under 42 times.
Wow.
Right. And in our portfolio, it runs like that. We don't have many companies in our portfolio, but that's what we're looking for. We're looking to companies that we can partner with and we can build and we can work with over time. Now, we're a little bit the victim of our own success because the companies in our portfolio, they have more needs than we have capital. So actually, we're now learning ourselves how to partner with capital. And interestingly, capital has some of the same limitations some of our companies have, where people have a certain idea and it's very difficult to get them off that paradigm, right? Investment capital is the same, right? We have a very unique way of dealing with our companies, and we don't want to manage money. We need to have partners that invest with us, but we definitely don't want to manage money. And so for us to find the right capital partners is a project that we're sort of undertaking internally, and it's going to be our goal in 2019 to find some partners that can come into to work with us in our various businesses. So we're literally on both sides. We're learning how to be, a good investment, and at the same time, we're working with companies that we try to make into good investments. So it's a little different business model than many of you have, but it's very gratifying to go into a company and to build pieces that are missing, or to make something work where nothing was working. And then we do that not just here, we do it in Asia, we do it in Europe, we do it in the Middle East, we've done business in Russia, we're a global business.
So it's good. So maybe as the panel, do you guys have any suggestions for him on areas he can go to find that opportunity?
We'll talk to you.
That's good. Anyone else with a question on kind of where you're at and where you're looking to go next, and that they might be able to answer directly and give you some direct insight on?
I'm serious, we will talk to you, but also, I don't know your full story and so forth, but there was a business I had helped work on raising, I hate to even say the number because it was astoundingly big, but we went and talked to the sovereign wealth funds of Singapore the two sovereign wealth funds, Temasek and GIC. Talked to the Chinese government with their sovereign wealth fund. There's a lot of pools of capital like that out there. So depending on what you're doing and the size and so forth of what you're doing. Up until recently, I've been a bit more intrigued by some of the international pools of capital than I have in the US, because the US has gotten more risk averse, where like Asian investors and so forth are much more aggressive. And even Canada, you know, the Canadians know how to do things like, you know, fund a mine, which in these days and age is kind of mind-bending, because, you know, you might be spending money for 20 years before you even see any revenues. So there's a lot of interesting pools of capital. We can talk offline and so forth, you know, depending on what you're kind of looking for. But again, I'm just a huge believer, having done this really my whole career, is that this is all a game of connecting the dots, and you just got to go out there and have a lot of conversations, because the one thing that has always been for certain when I've started any project where it's raising money, where I think the money is going to come from ends up never being where it ultimately comes from. It comes from something very different, something that was probably not even on the radar screen when we started, per se. So that's why you just got to go, you know, have conversations and see where it all plays out.
Anyone else with a specific question for the panel in that direction? Dick told me to make sure right around 7 o'clock to wrap up the official discussion, but he said that we have the room for an additional half an hour. So you guys are welcome to stay, mingle, chat with the panel, ask them some offline questions, share your business cards, give them an elevator pitch, whatever you'd like to do. So with that said, I want to thank you. It was a great discussion, Patrick, Raja, and Rob. And thanks, guys, for putting this all together. Oh, sorry. Go ahead.
It's just off topic.
That's fine.
all.
Yeah.
Tell me something, guys. You know, funds are put together. The point of the fund is to invest in cool things and make money. Aside from making money, what's the turn on? What makes you do it?
This is really big for us, because one, it doesn't need to be cool. I've said a few times, we like stuff that's
Sure.
kind of frankly boring at times.
But boring is cool. Boring's the new.
Yeah, boring can be super cool,
Or something.
especially when you find little things that are like, you know, tech enabled and stuff like that in a boring business. But anyways, the other big reason is the whole idea around impact, and we're not an impact fund per se, but it's really the idea that, you know, all of our investors are really entrepreneurs, business owners themselves, or at a bare minimum, it's been people that have been around it a lot and have, you know, and so there's a sense of giving back, right? But not necessarily like giving back like we're gonna go out and make donation, but it's this whole sense of like, we want to come in, help a business grow. And so we have the whole theme. Our fund is kind of dedicated around the history and legacy of James J. Hill. So we talk about empire builders and so forth, and really finding and funding and supporting today's empire builders. That's a really key theme to us. And that's why, again, it's not about the money. It's really about where and how can we work with them, how can we engage our shareholders and broader stakeholders to help these businesses out, because that's what people get really interested in.
Yeah, so I think if you look at your lives, after you get out of bed and get ready, all day long, you're really helping someone. Okay, that's what we do every day without realizing it. We come home, we are helping the family. So what I take pride in, I believe, you know, it's kind of shared, is that what is life all about? Okay, it's, I believe, making this world a better place, and to do that, help others, and I guess in some ways make it better for others in my own way. Okay, because working at a lot of big companies, I hated working there because just all the red tape and all the dysfunctional stuff, as you have observed. I mean, everything looked bad to me, like, you know, Patrick was saying. So I feel good about providing a work environment, and this is kind of my mantra for the people, is to create an environment where these people come to work and are successful. Okay, and I call these people as self-directed torpedoes, that they can come and play the game and they feel like they are succeeding. And every time when we hire an additional person, it makes me really feel good that we have added somebody else to this team who's gonna have a good time.
That's good. Rob?
Yeah, I think there's some confusion about how micro funds work. You know, the typical structure is like 2.5% management fee and like 20% carry. That's pretty typical. And so if you think about like a micro fund is defined as less than 100 million, but say, you know, $15-20 million seed fund, that basically won't cover our operating costs for the 4 or 5 years, which means I'm going to live without an income while I'm running Fund 1. So if you're asking me for a donation for your project or what, you know, sponsoring some event, I'm already living without an income for 4 years because I believe in what I'm doing. But you don't have to cry too much for me or anything. I'm in it for the upside, just like I was when I started a software company. That 20% carry, I believe, can be monstrous because I believe I can run a very high performing fund. And so it's sort of our own startup, right? But there is a mission alignment, you know, beyond the financial side, and I'm a risk taker. The other part of it is I have, you know, 3 young kids, and I have a lot of friends and family going back generations that are from Minnesota and the upper Midwest. And I look at the people are very, you know, we're blessed to have these Fortune 1000 companies, you know, most per capita in the US in a city. But I look at these companies, I think over 20 years, the pace of disruption is going to just destroy many of the legacy companies that make our community great. And I would rather not move than rather not stick my head in the sand. I would rather be a part of a movement to create the next wave of great companies. We're not going to try to get Amazon headquarter 2 here. That is way too expensive of a proposition. We need to just build great companies here that are built for, you know, the next generation. And I think I'm afraid of what will end up happening. You know, you just watch what happens with Target and the actions they take in response to Amazon. You know, I don't feel they're going to be, you know, I don't think they're investing in the long term. And I think, you know, you see what happens even United Health Group, which is close to a monopoly as we probably have in the, you know, top 10 company in America. And Amazon talks about getting in their industry and their stock goes way down. Like, it just shows you we need to build great companies here and we need to get on board with that. And also we need to stop the kind of brain drain. And I think that the sort of positive side of this is, you know, there's now kind of there's now like emigration happening from Silicon Valley. It's been kind of a brain drain for a long time. And, you know, I'm just, the more we can create high growth, vibrant, awesome companies, the more we can encourage that emigration back, you know, the boomerangs, but also make sure the brightest minds and the hardest working people, you know, have great opportunities and make the region awesome. But we have a place orientation about our fund. That's what gets me out of bed.
It's really good. Just a personal note, I mean, like I said, I'm on my 3rd company and all 3 have been venture backed, and I think I've probably pitched 250 venture capitalists, 20 of them in the Twin Cities, 230 of them on the coast. And I mean, these 2 guys on either end from venture capital, Raja obviously more of a business partnership group, but are, I mean, pretty top notch. I mean, I think we're pretty lucky in the Twin Cities that you're both doing what you're doing. I haven't experienced the kind of thinking that they have in New York or San Francisco or LA. So I think it is a pretty great group here tonight.
Yeah, nice job. That was a nice way to end this panel, by the way. That's
I'll take all the credit in the world.
Yeah.
Great question.
Excellent.
Yeah.